Hello. Today is Sunday, August 23rd, 2026. Here is your daily signal. According to Fortune, the U.S. national debt has now surpassed the $40 trillion mark, and Treasury Secretary Scott Bessent is turning heads with a wave of bond interventions and direct market actions. In recent months, the Treasury has focused on expanded bond buybacks and even moved into currency markets as part of its push to manage rising debt servicing costs and address post-pandemic deficit spending. On August 20, 2026, Scott Bessent told CNBC, "We can grow our way out of that," referring to the record-setting $40 trillion debt total. While the U.S. has launched a $4 billion Treasury bond buyback plan, ING analysts described these measures as rearranging deck chairs on the Titanic. Bessent is being called the most interventionist Treasury chief in decades, but experts warn these fiscal moves might only temporarily suppress borrowing costs without tackling chronic deficits. In the near term, positioning fiscal policy as growth-oriented could help steady market confidence, yet if large deficits persist and no structural reform is made, the U.S. may soon face skepticism from investors, higher risk premiums, or even the threat of credit downgrades. Next, on major U.S. retailers, Fortune reports that Walmart's sales growth has fallen to its lowest level in 6 years, as middle-income American shoppers notably reduce their spending. Meanwhile, Target is staging a turnaround, celebrating a second consecutive quarter of earnings growth boosted in no small part by a nearly $1 billion Trump-era tariff refund provided by the U.S. government. With these shifts in consumer behavior, retailers like Walmart and Target are feeling the impact of both changing shopper habits and the consequences of federal policy around tariffs and refunds. On August 20, 2026, Walmart's struggles became clear as middle-income shoppers pulled back, while Target posted a 3.8% sales rise and saw $1.65 of its $4.11 in quarterly earnings coming from government refunds. Looking ahead, these trends could force retailers to step up their efforts to target affluent customers and may make their results especially vulnerable to future refund or tariff policy changes. Longer term, persistent changes in spending may lead to shifts in product and pricing strategies, and continued volatility could influence hiring, investment, or even reshape supply chains across the U.S. retail landscape. Turning now to the fast-growing world of artificial intelligence, TechCrunch reports that Micro One, an emerging AI data startup, has reached a $500 million gross run rate amid the booming race to supply training datasets for advanced AI models. As the demand for ever larger and more complex training data intensifies, essential for powering everything from search algorithms to autonomous vehicles, companies like Micro One are quickly capturing the attention of global investors. The AI training market has grown rapidly, with economic metrics such as run rates, funding rounds, and major tech client count serving as top signals of business health. This month, Micro One $500 million milestone is being seen as not just a moment for the company, but for the ecosystem as a whole, reflecting rising confidence and likely attracting even more capital to the sector. Short term, this success is expected to trigger further investment, potentially fueling more innovation and accelerating new AI rollouts across industries. Over the medium term, competition and industry consolidation may intensify, and the expansion of data providers will underpin the next generation of AI, but the whole sector could soon face more regulatory scrutiny over data privacy and integrity as it matures. Now, onto the markets. International markets indicated modest gains. Germany, tracked by EWG, edged up 0.64%, while Japan's EWJ advanced about 0.97%. France and the UK ETF EWU also ended higher, with Spain's EWP seeing the largest move in Western Europe at 1.04% up. Chile and Belgium outperformed, with Belgium's EWK up 1.26%, while Africa's AFK surged more than 2.3%. In commodities, gold saw a sizable rise of over 1.95%, with GLD leading, and platinum advanced 2% as PPLT gained, while agriculture held steady and natural gas slipped marginally. Uranium outshone with a 5% jump as URA rallied, and lithium LIT gained more than 2.7%. Turning to sectors, the S&P 500 posted a 0.41% increase to 765.72, healthcare led, climbing close to 1.29%, while finance rose just under 1%. Real estate as tracked by XLRE was little changed. Semiconductor stocks tracked by SOX declined about 0.44%. In the favorites, Oracle jumped 3% to 146.47, while Adobe and Microsoft posted moderate gains. Nvidia fell slightly by 0.98%, and Apple ticked down 0.62%. Among notable movers, RF Acquisition Corp Roman 2 RFI surged over 226%, while Megan Holdings MGN plummeted nearly 98%, marking the day's top gainer and biggest loser, respectively. That's it for today. You can find more news and details on our website. Goodbye.